economic costs are all the costs that a firm will incur when they're producing a good or service. This is going to be all of the cost to the four factors of production. The four factors are land, labor, capital, and the entrepreneur. So if you're covering all economic costs, that would be the payment to land, which is rent, labor, wages, capital, which is interest, and the entrepreneur, which would be a normal profit. So we're going to break those down into two kinds of cost. We've got explicit and implicit cost. So you'll need to know the difference between explicit and implicit and an example of explicit and implicit. So if you think about X is something that's on its way out, and M would be something that like you import. You import something that could come in. So explicit costs are any costs that are paid out from your firm. They're actual cost of production. So an example of something that is an explicit would be payments to employees. It's anything that's an actual cash or a check or a credit card payment. So if you're going to see your accountant, if you were to hire an accountant to do the tax returns for your business, you'd have to go maybe every month and see that person. You'd take your little bucket of receipts. You would put in that all of the taxes, not taxes, all of the employee stubs. You would put all of the receipts, invoices that you paid for materials to make your product. You would put in there your electric bill, your water bill. You would put your mortgage payment. It's any actual payments. So it's anything that goes out, actual payments out from the firm. Whereas implicit is a little bit different. Implicit is not anything that you actually are paying for, but it's accounting for anything that you could have earned. It's things that you're missing out on. So X is anything that you're actually paying, something that's going out. M is something that could have come in to the firm. Accountants do not consider implicit cost when they're doing their calculations. Economists consider implicit costs, and I'm going to show you an example of these. So implicit costs are things that you would have had if you had used your own resources. For example, if I were going to open my own business, let's say I'm going to open a flower shop in downtown Picayune, and I own a building already, and I would say I'm already renting this building for maybe $500 a month. If I'm going to use that building now to house my flower shop, my fictitious flower shop, then I'm going to be giving up my rental income that I would be bringing in. So an example of an explicit cost is the $500. I could be bringing that in, but because I'm using my own resources of my land, then I'm going to give that up. So these are things that we have to consider. Another example would be my salary. If I am working at, let's say, I don't know, say I'm working at a flower shop in Poplarville or in Gulfport, and I'm working at 1-800-Flowers, and I'm making $50,000 a year. This is my fictitious job. I'm going to quit that job and I'm going to open my own business, so I'm going to have to give up that position to open my own business. So I would have earned $50,000, but now I'm not going to earn that, so that's going to be an example of an implicit cost. I'm not actually paying that out, but it's something that I need to consider. The third thing is I'm going to need money to open my business. And let's assume I had $25,000 in the bank and it's earning interest right now in a CD. But I'm going to take it out and use it to buy inventory and cash registers and equipment for my flower shop. So I'm going to be giving up interest at the bank. So that is going to be another implicit cost. It's something that I could have earned, but I'm not going to be earning. So that's also going to be in the list of implicit costs. And we also are going to consider a normal profit there, which is the payment to the entrepreneur to maintain their salary. So all of these are implicit costs that we need to consider. This is going to be a sample problem on how to calculate accounting profit and economic profit. In this problem, it says Lorenzo lives in New York City and runs a business that sells guitars. In an average year, he receives $851,000 from selling guitars. Of this sales revenue, he must pay the manufacturer a wholesale cost of $476. He also pays wages and utility bills totaling $281,000. He owns his showroom, and if he chooses to rent it out, he will receive $71,000 in rent. Assume that the value of this showroom does not depreciate over the year. Also, if Lorenzo does not operate his guitar business, he can work as an accountant, receive an annual salary of $34,000 with no additional monetary cost, and rent out his showroom at the rate of $71,000 per year rate. No other costs are incurred in running his guitar business. Okay, what we have here is a list of expenses, and it's asking you if they are implicit or explicit, and then we're going to put them over here into this table. So the rental income he could have received if he chose to rent out his showroom. We have explicit or implicit. We said explicit are a cost that you pay out. They're exiting your pocketbook, and implicit are things that could come in. So rental income you could receive is going to be implicit. Salary you could earn would be an implicit. The wholesale cost for the guitars would be explicit. Wages and utility bills would be explicit. So if we go up here and start putting in the things in the chart, it looks really good to start with. He receives $851,000 from selling guitars. Let's format for currency. Okay. Of these sales revenue, he must pay the manufacturer the wholesale cost. Okay. Guitar cost, which will be subtracted $476,000. All right, he also paid wages and utility bills, wages and utility bills, which are $281,000. He owns his own showroom. If he chooses to rent it out, he will receive $71,000 in rent. Okay, that's not a payment he paid out. That's something that he could receive. So that one's going to be an implicit cost of $71,000. All right, assume the value of this showroom does not depreciate. Also, if he does not operate this business, he can work as an accountant and receive an annual salary of $34,000. with no additional cost. I just had ones in there just to get the formula to go. So here's what we have. We started with total revenue, $851,000. We subtracted out the payments, explicit cost, and we got a total of $757,000. So 851 minus 757 gave us 94,000. So that shows us accounting profit is $94,000. We took out implicit, those totaled 105, and it left economic profit at negative $11,000. So in your notes, it asks you which one is higher, accounting profit or economic profit. The answer is going to be accounting profit, because accounting profit only takes out explicit costs. Economic profit takes out explicit and implicit cost. Accounting profit and normal profit. So accounting profit only takes out explicit. Economic profit subtracts explicit and implicit cost. Here's another diagram showing you the same thing. So what is normal profit? It is the profit necessary to keep a firm in operation. This is the payment to the entrepreneur. And that's the end of that problem.